Hi friends, how are you? Vladimir here, and this is the weekly review for the last week of October 2012, 28th of October. Well, last week was very interesting. We got several opportunities, and that was very uh, nice technical week where all the things that expected to happen happened. As we remember, sometimes there are periods that it does not happen this way, like in August, for example, which was sideways months. But right now, the market is wonderful, and the beginning of September or the middle of September, I told you it's time to be in the markets and do not stay out, as you might miss the opportunities. So, what do we have for the upcoming week, and where are our trades? Well, I've been talking about the dollar yen, and I hope you have had the chance to watch my post on the blog where I talked about the yen pairs. You can find it here on the blog, 25th. That's the blog. If you still don't know what I'm talking about, that's the blog, VladimirRibakov.com. I highly recommend you watching this blog on daily basis because I put the things there. And you can follow me by Facebook, by Twitter. I upload all my posts to there as well. And that's what I was talking about, the Japanese currency time, right? I said that dollar yen is going to make a stop somewhere in the range 80.30 to 81.10. And right on Friday, as you can see, Friday was 26, right? And I was talking about that 25th. So right after that, 80.30 was reached, and we got a down move, right? Beautiful 4-hour chart divergence, more than 20 candles right, and we got a move down. About the 20 candles right, of course, you can learn everything about that and all the tools I use on the Divergence University. Everything is there. Now the question is, what's next? What is going to happen right from here? Several important things happen. First of all, this is a beautiful triple candle engulfing. If you want to learn more about that, go to the blog and go for my free downloads and learn about the candlestick ebooks I share there for completely for free. This is triple candle, and it means most likely we are going to have some correction up before a continuation. Now, we are right on the 200 moving average on the daily chart, but I would not treat it as too much reliable signal right now, because during the whole period it has been crossing up and down, ignoring completely the moving average area. So based on the daily chart and the triple candle engulfing, we could expect a correction up. Now let's go for the 4-hour charts. What do we have? On the 4-hour chart, for the very first time, we have a bearish convergence. About the bearish convergence, by the way, you have had the chance to watch for free my webinar, which I have had in the past, a marathon day about that. You have had the chance to watch it free completely before getting the Divergence University, and that's a bearish convergence. That means we are going down for further down move, most likely. And if we take a look, there's a trend line that still could be tested before any new direction will be taken. Based on this convergence, there is room to go down, but as we know, after each convergence there sometimes could happen a retrace before the move continues, right? Now what do we have here? How do we call that? Band to band move. After band to band, and that's, I would not say it's so wide, but it's pretty clear band to band. They open, so not sure this is very wide, but it could go for maximum for duplication before making a move. Maximum for 2 duplication, of course, but it could go for 1 duplication straight, make the correction continue. And if we take a look one lower time frame, then we have a potential bullish continuing divergence that could take the pair higher. How much higher? I go back for the daily chart, and if I confuse you, I'm sorry. That's how I analyze, going from the higher to the lower to find all the things I have. And because in this case, I went back to the daily, because it all started with the daily, the triple candle engulfing. Now, based on that, it could go for the half or even bit deeper. So 79.90 or so could be a good correction area. And if we take a look on the 4-hour chart, that could be also around the 20 MA. So, just to make long story short, after around these areas, I could expect dollar yen correcting it, and right after the correction, I suggest going to lower time frame and find the bearish divergences we will get as the pair. I expect the pair to continue right from there. So once again, all the signs showing that it might make the correction, and if we do have the correction, then it will be good time to jump in. Now we have the most perfect signal here is the band to band, and the convergence, which provide of course the signals that there should be a correction before continuation. More details and all my secrets about the Bollinger Band and band to band and 20 candles right, as I said earlier, on the Divergence University. You can that's the place where I share all I have, all opened, all the cards on the table. So I do expect the bearish move, and the final call will be from the harmonical pattern, which shows us as well that there is a beautiful bearish butterfly that should take the pair lower to something like 79 or even lower. All the signs for longer down move. All that, by the way, as long as the 80 area will hold. As long as 80 holds, for me, it could be a beautiful bearish trend to provide us something like 50, 60 or more pips down before choosing the next direction. Now, I've been talking about many other pairs also on the blog. One of them was the pound yen, stopping on a 200 pips range, pretty big range, but that's a pound yen, from 129.5 all the way to 131.5. And let's take a look what happened right on Friday. Pound yen, where does it stop? You see the place, 129.50. We almost got an extreme divergence, right? Almost. RSI did not reach 80, was very close to that. It reached the 77, almost 78, and we got a beautiful move right after that. What's about to continue right from here? Well, it's not as clear as dollar yen. I still think that there is room to go. There is a beautiful trend line that could be tested once again, something like that, of course. But I'm not quite sure about this pair right now. There is no convergence, nothing. So maybe after a correction up, if will happen, we can talk about selling on lower time frame than a 4-hour chart, like 1-hour chart, for example, if we will get a bearish divergence, of course. As for now, I keep my bearish opinion, but this is not the time to join from my point of view. As I said, time to join was from 129.50 all the way to 131.50. That's the range we should look, and we got the move. So now it's not time to join. If we get a correction, then we can go for lower time frames to find divergence to join. So dollar yen, from my point of view, will be the best yen pairs. I was looking at the euro yen from somewhere in between 105 to 106, but the pair never made it, and my expectation about this pair were wrong. But what's going to happen now? Well, very interesting. It could be head and shoulders here, which seems like breaking down, or it could be, if you don't know this pattern, don't feel bad. It's very rare. It could be a diamond. Now, classical is definitely not, but if it's a break of a diamond or a head and shoulders, it doesn't matter. That's what should be duplicated down since the break, right? So, in other words, the euro yen could push to 102 or even lower. Is that the time to join? Uh, well, there is no bearish convergence, so I would act very, very careful here. But I would say yes, if it makes any push up, that should be a sell opportunity. And 102 could be the final target. But I would act very careful here, because if this area, the 20 MA and the resistance area, 103.70, if this area will be broken up again, careful. Careful, because right from there we might get a push to 105, 106. Alright? Pay attention for that. As long as it does not happen, there is a room to push lower. So, talking enough about the yen pairs, let's take a look on other opportunities we have. We've been trading the Australian Canadian several times on the club, on the Vladimir Forex Signals club, and we enjoyed short move right here, and we enjoyed the short move right here, getting out from both right on time. Now pay attention. This is a clear band to band move. Classical? Not exactly, as we have small interruption here, but it is still band to band move. It's fighting the 200 moving average. It's fighting a stiff, very stiff resistance range, right? And there is a trend line meeting us a bit higher, or something like that, around 104.60. From my point of view, this range, and yes, it's pretty big range, but that's a daily chart. So we have to respect the market and give it enough place to play around. In this range, it is going to build a clear stop and retrace the whole way back to the daily 20 MA or even lower. That's the beauty of the band to band. Once again, if you do want to know all the tools and all the visual tools and the technical tools, all the strategies for entries and for taking profits that I use, I share everything in the Divergence University. So Aussie Canadian should be a perfect opportunity for a sell. On the 4-hour chart, there is a wonderful divergence. Now wait for the stochastic to make a stop around. It could be somewhere in between 103.30 to 103.80, and if it breaks higher, closer to the trend line, wait for the candle pattern and the stochastic to start to cross down again. NMACD, slope of the histogram pushing down, and that would be your perfect sell sign. Now, talking about targets, as I say, daily 20 MA should be a target, and daily 20 MA will meet us, believe it or not, on this trend line. You see that? How perfect. If it pushes up, down, 20 MA will follow this trend line that we have on the 4-hour chart. How perfect is that? That's why I think it's wonderful sell opportunity for Aussie Canadian coming soon. No, I don't know exactly what's going to start. That's why I say on a daily chart there is a range, and you have to respect this range, because that's how the pair build a bearish cycle. Respect that if you want the market to respect you back. I was talking on the blog about the euro against the pound. If you remember, that was right here. The bulls are retired for the euro pound. That was my post. Once again, I do ask you to, if you want, of course, to watch the blog, because I put updates, I put trades there, and well, you can benefit from it. I was looking from 082 to 083 for a stop, and I missed it by several pips. Now, in such cases, I said, when the market does not want to provide, always follow the important trend lines. In this case, there was a head and shoulder trend line which provided a sell opportunity. Now, the question, what's next? On a daily chart, there is a very, very, very powerful trend line. Daily chart finished here like a hammer, bullish hammer. But, and there is a big but, stochastic is crazy down, RSI just crossed 50 down, MACD slope of the histogram is very, 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 very bearish. And if that's a channel, we got 1, 2, 3, 4, 5, 6, 7. The break could happen on the 7th. And if it does, we are most likely going for a duplication. Let's go for a lower time frame to see what's how it should be. That's the 4-hour chart, and that's the trend line. Let's put the trend line back. That's the trend line we have. Something like that. Of course, not exactly, but something like that. We have 1, 2, 3, 4, 5. After 5, we normally get A, B, C before we get any continuation. There is a stop around the 4-hour 20 MA. Alright, you can see the stop. So, I do think after a small correction here, it should push for A, B, C. The C could take us to 080.55 all the way up to 080.90. That's the range. And right from there, my recommendation, take this trend line and follow something like that. Maybe my imagination here is crazy, but that's what I think could happen. A, B, C, playing around, creating for us a very, very interesting bearish hidden divergence right after that. Something in between range of 2-3 days. It should happen, and then I do expect it to break down and push lower. Now, my bullish scenario is relevant as long as the daily trend line holds. If it breaks the daily trend line and closes below, of course, my bullish expectation for a correction becomes irrelevant. And my bearish expectation for longer run, as I said, would be as long as it holds below. Well, I would be even more accurate here, and I would say not 080.90 but 081.05. As long as it holds above 081.05, I will keep my bearish expectation. But if 081.05 will be broken in any case up, that's something to pay attention to. So, to make long story short, I expect a small correction, A, B, C here, then down move and a break below the trend line. That's my expectation for the euro against the pound. So as you can see, many opportunities there. The next one will be dollar against Canadian. Reaching the 200 moving average, reaching a very interesting resistance range starting from 0.99 80.90 going all the way to 101.70. On the 4-hour chart, there is a beautiful continuing divergence. Beautiful Arami finished on Friday, end of Friday. There is a beautiful bearish divergence, and from my point of view, it's going down. How far? 20 minutes first target. Final target of the 4-hour chart, of course. Final target, trend line, as it might be a channel, or it might be an expanding channel. Whatever it is, and it doesn't matter how you play with that, we expect the pair to correct down. We have 1, 2, 3, 4, maybe we're going all the way to 5. So first target should be conservative on a 4-hour chart, 20 MA, based on continuing divergence rules, and final target, lower band of this channel. Pay attention to 100.70, that's the final area I could accept. I would even be more aggressive and risk give it a chance to 101.15. That's the final. Breaking above that gives us a bullish scenario clearly. That's what I could expect for the dollar Canadian. And that's, by the way, what I think will take the Aussie Canadian down at the end. Few words about the gold and the silver. Well, my expectation did not change, and I still think it's going to build the bottom right here and retrace all the way up again. But it could take time, so I have my patience, and as I said, I do think that it's already time to be in investor style. A few words about the indices before continuing. Well, something interesting is about to happen most likely. First of all, the Dow Jones, talking about that, the trend line was broken, never tested though. But we now could go for a head and shoulders, believe it or not, something like that. Okay, shoulder, head, we could go and create another shoulder. And I would say, as long as the daily 200 moving average holds and the support holds, I expect for the days before the elections, all the way up closer to the elections, as you can see, I expect another shoulder to be created. So, as long as the 200 moving average and the support at 12,900 will hold, that's where I expect the Dow Jones to rise up before the elections. Right after that, if nothing special will happen, prepare yourself for something bearish. Same with S&P. Same with Nasdaq. Expect corrections before the next push down. And you might wonder why I'm not talking about the euro dollar and the pound dollar. Well, I will reply simple, because I don't have any opinion about those. I keep neutral opinion, and I really don't know what and when and how correctly to analyze them, and that's why I prefer to stay out of them. And for the finish, pay attention for wonderful opportunity that will be the platinum, which from my point of view is reaching very, very beautiful place. First of all, there is a support, extremely powerful support around the 200 moving average. The next support is here, and the third one is here. I think it could go for a daily Bollinger Band duplication. There is a beautiful bearish convergence, which means after that it could push higher, because on longer view there is a bullish hidden divergence. Combining the convergence with the divergence, we could expect a beautiful correction up. Going for 4-hour charts, we can see that there is a divergence already, and this up move, correction up, could start on any moment. How far could it go? Well, the 1585 is the first target I could expect it to go, but then it could go and push all the way to this trend line, which could take us to 1600s or even higher. That's just for the finish. So many opportunities are in front of us just before the elections. Make sure to be there. The market provides great things. Do not miss that. And I forgot about two pairs, and then make it quick. Euro SEK, powerful divergence, wedge. So get ready. Break below the wedge will open the doors for the pair to move all the way down to this trend line. That's about the Euro SEK. But as I said on previous weekly reviews, it could take us to 875 first, or even higher to 890 before crashing. Same about the Euro NOK, which still has a room to push a bit higher, and that could go for daily Bollinger Band duplication. There are several resistances on the way, but compare with the 4-hour chart, 20 candles right, and the divergence already exists. Every push up is just to make stronger down. So, in other words, get ready for sales. Something bearish and nice is about to happen on these exotic pairs. That's all for this wonderful week, friends. I hope you will enjoy these trades. Thank you very much for watching this video. I know it was not short, but it was very, very, very informative. Many things are happening. So thank you once again for your time watching this video. I wish you a beautiful week, and I'll see you on the live trading group.